All right, well, we're back for the March version of the BWA Economic Update. I'm John Cleaver, partner and senior financial advisor. And with us again is Dennis Bacon,
Chief Investment Officer at Beyond Wealth Advisors.
Absolutely. So, kind of a quick turnaround from February, but we're excited to maybe give you a little bit of an update, a little shorter update perhaps. So, January, we got off to a pretty good start. February, not so much. Things shifted a little bit. So, what do you see positive going forward coming out of that negative?
Okay, well, and overall the markets generally are positive for the year, slightly at this point in time. We see inflation moderating. The Federal Reserve continues to raise interest rates and squeeze some of the excess funds out of the market, which is what causes inflation. A couple of things outside the U.S. China's manufacturing index improved again, so it's even more in positive territory than it was previously. After 2 months of declining retail sales, February rebounded in retail sales. Now, some of that may be because of what they call seasonal adjustments. So we had a little bit warmer than we expected also, which is one of the reasons why the gas prices are down, as far as natural gas prices. New home sales actually were up 7% for the first time in several months. But that's the only bright spot in the housing market. There was a couple others that were kind of flat, but that was the only really bright spot. And unemployment rate continues to remain at historical lows.
So we had a little bit of a pullback, a little bit of a rough February, but most of that sounds like better news.
Pretty good news.
So does that mean the outlook as we look, going forward is getting better for the economy?
I'm not sure. I don't think we've hit that turning point yet.
Do we call that a head fake?
Yeah, kind of a little bit of head fake. I think that the negative news is slowing, much like we're seeing inflation slow down. A 5.5% inflation rate is not good. And so I don't think we've turned the corner yet. Matter of fact, I think we still have some rough waters to go. The job markets remain strong, but if you go out and look in the tech sectors, you're seeing a lot of major layoffs. Tens of thousands of people being laid off out in California and some other places in the tech sectors. I think that's just a foreshadowing, I think, of what we're going to see, because everybody is kind of trying to get all the good players they could on their team, and much like a baseball team, goes and gets signs everybody they can. Then by the time they leave spring training, they have the ones they're going to play with. Well, and a whole lot of those people go by the wayside. I think that's kind of what we're dealing with right now on the employment front. There's a lot of people there's a lot of jobs open, but they're looking for specialty players that fit particular positions. Sorry for all the baseball analogies, but it is getting close to baseball
spring training.
That's right. Consumer debt has hit all-time record highs, or near record highs at least. That's after 3 years ago, we were at all-time savings level during COVID. Everybody put money away. I still think we still have a little bit that once I heard it said that once a lifestyle is attained, it becomes a necessity. So you have a lot of those people are spending a lot of money during COVID, and they really haven't toned back their spending because they have credit available to them. And I think that, as one person said once, that chicken will come home to roost. And I think it will. I think a lot of people just don't see the rough waters ahead that we're having.
So that's a good segue then into, let's look a little further out. How do you see this unfolding? I know we've been talking about maybe, some rougher waters ahead, as you said, and potentially whether we use the technical term of recession or not, that's up for debate by maybe others. But how do you see this unfolding over the next, 6 to maybe 9 months?
I've heard a lot of terms used, like a very sluggish economy during the summer and fall, maybe even the late year. Different economists kind of talk about which one it's going to be. I think that the bottom of the economic cycle will hit sometime. Probably during the summer. It could tail off into the fall. I think by the time we get to the holiday season next year, I think we're going to see recovery. Now, recovery may be lower than where we are today, so it still may not feel great, but it'll be turning in the right direction. That's kind of what I'm seeing on a forward-looking basis. I think, remember that the economy really kind of is we see the economy in real time of what's happening. The markets tend to be reaction or tend to not be reactionary, but tend to really be foreshadowing
Right.
of what the economy looks
Yep.
like going forward. So they're usually 6 to 8 months ahead of where the real economy is. So
Yeah.
the market returns or market turnaround should happen sometime here in the next 6 to 8 months, would be
Right.
what I would think.
Yeah, I mean, you've mentioned it so many times in these updates, separating this idea of the market and the economy. And so speaking of the market, we're, bonds have had kind of a rough month where they had really recovered through the end of last year. 10-year treasuries up again over 4%.
Right.
We look at the sectors of the market, 11 sectors, 10 of them were down in February. Tech eked out just a little bit of a gain, which was good for tech.
Less than
because-
0.5%, but yeah, it was good.
That's something good for tech because tech beat up pretty good last year. Small cap, doing what it's done. So talk just a little bit to the markets as we go forward.
I think, I still say we're going to have a lot of volatility. We're going to have a lot of days where see these 3, 4, 5, 6, 7, 800 point moves. I mean, maybe. And I think most of them are going to be negative rather than positive in general until we hit that time when we can see the market the economy turning around. A 10 to 15% decline in the market would not surprise me between now and midsummer to fall. I really feel like this is just normal. Almost every year, you can go back and look. Virtually every year, we have a 10% pullback sometime in the market. And so I just think that'll be in the middle of the year this year. If we go back 4 or 5 years, we're still in a way better position than we were back then. So people tend to forget that as they're looking at, you always look at what's going on right today. Our economy actually is really pretty strong. Relative to the rest of the world, we're very strong compared to the rest of the world. I do see there are some places where on the international front, I see some good opportunities, but in general, the U.S. should lead again in the economy. It is good to see, places like China, their economies improve. That will help us. I mean, we can all have our opinions about China, but the truth is they're a major world player. We still don't see a lot of good things coming out of Europe, but they're stable. If we could get rid of the Ukrainian-Russia situation, it would probably come along pretty good. So that would be a white swan that could come out. If that would take care of itself and it would go away, we probably would see a little boom on the European front. So in general, I feel pretty good about a year from now. I think that we're going to it's going to be tough sledding here for the next. And so if you have cash available and stuff, you're going to kind of look for some times, I've heard it said that in the past that, when's the best time to make money in the market? And it's when there's blood in the streets. So if you have cash available at a time when everybody else is running, it's a time for you to go in. So, but we're not avoiding the market right now either. We really don't do market timing. Usually is a fool's game. So we really don't do that too much.
Yeah, well, fantastic. So, I mean, maybe just in summary, I hear you say, be patient, stay diversified, maybe look for some opportunities to deploy some cash. Don't wait too long, but be cautious, and let's keep our eye on what's coming, maybe a little bit further down the road.
Keep your long-term goals in mind, and your risk, what level of risk you can handle. We want to just make sure this is giving us a good test of where that is right now.
Absolutely.
And don't be swinging. The consistency is the main thing in your investment strategies.
Yeah, fantastic. Well, with that, we're going to wrap up. Make sure you reach out to your advisor. Reach out to us here at BWA if you have questions. We'd certainly love to sit down and talk to you more specifically about those. And with that, we'll wrap up the March economic update.
Let's look forward to a great spring.
Fantastic.